Well, there are lots of things happening in global energy markets. Who knows what will happen tomorrow or the next day, whether it's tariffs from the U.S., whether it's global recessions because of tariffs globally, decreasing demand in China, competition in the LNG landscape. There is lots going on, and there's no better person to give us a sense of how that is playing out than Robert Johnston, RJ, as many of you know him. He's a fixture on the global geopolitic and energy landscape commentary and policy and research circuit. He is the Senior Director of Research at the Center on Global Energy Policy at Columbia University. He is the former CEO and Energy and Climate Resource Practice leader for Eurasia Group, where many listeners here would have first met him. And he is our guest today on a bit of a special episode of Alberta Better podcast, talking about what's happening in global energy markets. RJ, welcome to the podcast.
Thank you for having me, Adam. It's great to reconnect.
For sure. You were a fixture on our annual calendar of events when I was running the Calgary Chamber. You were always giving an annual energy markets update. You've been a friend to the Business Council for a long time, but this is your first time on our podcast. So to kick things off, give us your 30-second elevator pitch of who you are and what you do.
Thanks, Adam. So I'm based in New York City and working at the Columbia University Center on Global Energy Policy, which is a energy-focused think tank within Columbia. But of course, most of my work in Calgary over the years was with Eurasia Group when I was working there with Ian Bremer. And that's where you and I met and where I spent a lot of time working with government, financial sector, and industry across Canada and around the world on the geopolitics of energy primarily.
I can attest to how highly sought after you are with respect to what's going on in the world, what's going on in energy markets. So we're honored that you're spending some time with us here today. Let's start big picture. You are, in fact, a Canadian who spent a significant amount of time working and living in the United States. You're an expert in the energy space, one of the world's top geopolitical experts. But probably the big picture question is, what the heck is going on right now in global energy markets?
Yeah, it seems like it was just yesterday that we were in that kind of 2022 window where energy security was the focus, and we had the Russia-Ukraine war underway. We had the kind of post-COVID supply shocks, inflation, and we had, really high oil and gas prices and commodity prices. But the new narrative really is one, I think, about a very different outlook, especially on the demand side, where the underlying macroeconomic story has deteriorated dramatically. And the supply picture probably hasn't changed that much, but I think the sense of significant economic risk in the outlook is now weighing on things quite heavily. Mm-hmm. Now, that's probably creating uncertainty that is going to slow down investment in oil and gas and minerals that we need over the next decade, and perhaps setting the stage for higher prices again in the future. But right now, I think this macroeconomic story that started with the slowdown in China last year and is now really about everything happening in Washington, I think is the main narrative.
I was going to ask you how quickly that picture has turned around, but you think it sort of started earlier last year, and then I would imagine it's really accelerated since Inauguration Day.
Yeah, I think that's right. I think last year, especially with respect to oil, the narrative was that global oil demand growth year over year was going to be less than 1 million barrels a day, less than 1% off the base, and that China would be the biggest slowdown factor there. Not that there wouldn't be growth in China, but it would be, a few 100,000 barrels a day per year versus, 2 to 3x that. Mm-hmm. And some growth in India, but kind of a weaker outlook in places like U.S. and Europe. So that was all before the trade war and the sort of economic uncertainty we've had over the last 2 months, which is only raising questions about the demand side in the larger global oil market as well. So that's definitely been the main narrative, I think.
Mm-hmm. As you look at the situation right now and compare it to other economic shocks, what do you think is being priced in right now? Is oil being priced in on a kind of a bigger picture, long-term global recession, long-term systemic shift in demand from China? Like what are we seeing in the pricing mix?
Yeah, I think the longer term pricing throughout all this has been reasonably stable, and there's a lot more sort of front end volatility. Two things aren't clear. One is whether or not Trump will sort of stick with this current strategy, or whether we'll get to some kind of a new equilibrium where there's greater U.S. protectionism, but not the sort of current level of like daily or hourly volatility and policy uncertainty that we're getting. And the second thing is that the supply-demand picture in the medium to long term hasn't changed that much, right? There's still a sense that we're heading towards a eventual plateau and a slow decline in oil demand, but that's not seen as something that's happening in the next 2 or 3 years, but maybe starts to be interesting in the next decade sometime.
Hmm.
But there's a difference between a peak and a collapse in oil prices versus or oil demand versus a longer term plateau and decline. So what we're talking about right now, I think, is mostly the short term, the front end of the market. That's kind of a dangerous place to be. Now, if you're a different industry that's kind of running, or governments that are running a budget based on prices, you tend to look at the next 12 months, right? Sort of the next where the liquidity is, and that's kind of where you're transacting. So right now, that doesn't look too good.
Yeah, I was going to ask if you have a broad sense of who are some of the winners and who are going to be some of the losers of what we're seeing play out in the markets right now.
There's a couple things. One is that in a lot of these situations, I think about emerging market countries like Turkey or India that are oil importers, right? And that oil is one of the key kind of inflationary risks or growth risks in their economic outlook. And in times like this, they tend to do better. Now, as it happens in this case, a lot of those countries are facing tariff pressure from the US, which dampens that a little bit. The Saudis are kind of in the middle. I think the Saudis are, as you know, OPEC Plus is sort of ramping up production again, as they promised to do. Some people thought maybe they would hold off given the economic uncertainty, but it looks like they might be a winner if you believe that reclaiming market share is a winner if
Mm-hmm.
there's slower non-OPEC production growth because of this. And then the losers seem to be sort of the higher cost non-OPEC producers, right? US, Canada, Brazil, Guyana, places that really depend on like IOC, non-government investment, because a lot of those projects are being reviewed in the current environment because of the uncertainties in supply chain, uncertainties in economics, and doesn't mean they won't move forward, but I think there's definitely some hesitation given everything that's going on.
Do you get a sense that any of the move from OPEC was pressure from the president to get the price down at all, or was that separate and apart from the production decision they'd already made?
I've heard in the rumor mill that such pressure has not been well received in the Saudi and UAE, and that they're trying to maintain a more independent position than maybe people think. Largely because I think they know that, I don't know if it's an art or a science, but the process of unwinding these longstanding COVID and post-COVID production cuts, the process of unwinding those is complicated, and they're not looking to introduce new variables like accommodating U.S. president. And honestly, I think there's some uncertainty over which way Trump is going to go on some of the key regional questions related to Iran. So I think they're kind of trying to operate with the plan that they had, which is to taper their production cuts and not let sort of short-term signals in the White House or the geopolitical environment influence that decision. Russia's another wild card there, because is Russia going to remain under sanctions pressure from the US, or will there be some kind of deal there that might let more Russian oil back into the market? I think OPEC Plus, the Saudis value some kind of relationship with the Russians, so they have to be mindful of that as well. So I would say overall, there's probably not too much effectiveness in that pressure from the White House, at least not yet.
Fair, and lots of, as you say, with the shifting relations between the US and Russia, US and Iran, what might have been some fairly exclusionary energy policy to those countries, it seems like there actually may be some different runway for them going into the future, depending upon how those relationships pan out.
Correct. Yeah. And I think before the inauguration, my base case was that we would probably see a maximum enforcement and or military action against Iran, and that might be combined with a softening against Russia. We may still end up there. It's just that there's a lot of unpredictability, right? That the US is having these talks with the Iranians. There's this strange kind of trilateral going on between Ukraine, Russia, and the US over a ceasefire there, with some uncertainties about what happens to the Russian oil and gas in that scenario. So yeah, there's a lot of uncertainty. I think the Saudis are just kind of reclaiming market share and rebalancing some of the production with an OPEC plus, but I think they're prepared to adjust it if they need to, if as events unfold.
Well, let's switch gears to a topic you're spending more of your time on these days, the U.S. Canada situation, we'll call it. It was interesting. I kind of chuckled to myself. One day, President Trump was at the podium saying, "We don't need anything Canada has. We don't need their cars, their lumber. We don't need their oil and gas. We have more of it than anybody." And I think at sort of 2 a.m. the next day, he got up and sent a tweet saying, "Gee, I wish somebody would really build Keystone XL." So, what's your take on Trump's view of energy and the U.S. position? What side of the argument does he believe? Does he think they're energy independent? Does he really want our energy? Can they live without our energy? What's the situation?
I think there's so much to unpack, right? Just in 2 months. I would say a few things. I think, first of all, oil specifically, even more so than natural gas and electricity, is one area where I think Canada does have real leverage over the US economy. And the reason for that is that the heavy oil that we send to the U.S. refineries is very difficult to find elsewhere. We just talked about the OPEC plus dynamic, and there are a few like similar barrels floating around in OPEC plus, but not that many. Certainly not 3.5 million barrels a day worth. And places like Venezuela and Mexico are kind of going the wrong direction on their production. So Canada has leverage with respect to that oil relationship. And I think the Trump administration realized that when they started to look at the refinery dynamics, that if you can't replace those barrels from another source, then basically you're just passing through the tariff cost to the consumer because there's no substitution to a tariff-free barrel from somewhere else. That's just not true in a lot of other sectors, which we can get to. The other challenge for Trump, I think, go beyond Canada is I think there's tension between his energy dominance agenda and the energy abundance agenda. So energy dominance suggests that you need a high level of production and a high level of exports, both for your own economy, but also to help your allies and hurt adversaries like the Iranians, Russians, Venezuelans by kind of curtailing and crowding out their production. Energy abundance says that no, you want lower prices. So you need lots of supply from Canada. You need prices to be at a level low enough to kind of keep inflation at bay, provide cheap feedstock for energy intensive sectors, to keep electricity prices low, et cetera, certainly gasoline prices. But the problem, if Trump's talking about $50 a barrel, that's well below what I think most of the shale producers would want. So if shale producers can't get the price they want, they're not going to drill to levels that would support the energy dominance agenda. So I can't figure out how they're balancing these two goals. When you add to the fact that there's no national oil company in the US and it's Trump can't direct, dozens of shale companies and they're all going the way they think they and their shareholders view the market, it creates a lot of uncertainty. So again, I think in times of uncertainty, the CapEx drilling activity falls off and the companies sort of take a wait and see approach, especially the bigger companies that now control the US shale, like the Chevrons and Exxons and Occidentals, right? They can afford to wait a quarter or two. They don't need to drill for cash flow. So they can kind of wait and see how this plays out. But I think the challenge is for Trump to figure out between energy dominance and energy abundance, which path do you want to go down?
Yeah. And seeing some of the stuff playing out of the White House, I would imagine that despite your argument that you can't have both, I imagine he's trying to achieve both.
One way you could achieve both is by having a deep partnership with Canada. The status quo, as you know, is that because of the Canadian oil and gas that's going into the US, a lot of it's being sent out again as refined products on the oil side, and then it's supporting the LNG exports on the gas side. So if you double down on that and built more pipeline capacity, one could imagine, although it may not be in Canada's interest given the tariff situation, one can imagine from a US perspective, additional sort of friendly, reliable oil and gas from Canada would help keep prices stable, which is the energy abundance side, domestically, while also supporting energy dominance agenda through backstopping U.S. exports globally. I think that's the message that the government has tried to convey, with some effectiveness, but it's unfortunate there's a lot of other things going on.
Yeah, that's an understatement. Yeah. As you see the things playing out, do you think there are arguments that are more persuasive or have an impact on him when it comes to which way to go on the energy abundance or energy dominance argument or options?
I think he's going to err on the side of energy abundance because even though he talked about drill baby drill and is close to the industry, I think he recognizes that a big reason he won the election was U.S. voter unhappiness with inflation. And as they look ahead to the midterms and the next presidential election, which he may or may not be a participant in, but his party will be, they don't want to unleash the inflationary genie again. And I think Trump has more of a consumer kind of mentality than a producer mentality. Doesn't mean all the Republicans in Congress would agree with that or the shale industry would agree with that. But that's kind of where I think they're going to come down on, especially when there's already other inflationary risk in the system from tariffs, from potentially a weaker dollar, from higher interest rates, all these other things that are floating around out there. So all that makes me think that they're going to lean towards energy abundance.
It's more sort of Main Street pocketbook.
Yeah, it's not the kitchen table type issue.
Yeah, exactly. What's your take on the US's push to some degree remove environmental and regulatory barriers, get projects approved faster? Actually, as just before we were recording this, I noticed that the US Army Engineer Corps has just fast-tracked Enbridge's Line 5 project, so that's going to be dealing with the uncertainty around that. But what's your view in terms of what that's going to mean for energy investment or infrastructure in the US? And comparatively, how does that place Canada from an investment attractiveness standpoint?
I think I would say neutral to slightly negative for Canada, but maybe not as negative as some people think. The problem is that when you look at these types of projects, the political risk factor is quite high, right? That if you're really going to commit resources to the US, you may like some of the regulatory steps that Trump is taking now, but what's going to happen in the courts? What's going to happen in the next election cycle, right? There's no sort of national consensus on what the regulatory system is going to look like. So yes, it may be trending in a positive direction for pipelines under Trump, but that could change. And it remains to be seen what kind of pushback there's going to be from the states and from environmental groups on that front. But certainly it does support clearly an effort to fast track things like mines and pipelines and transmission more so than there maybe was under Biden. The other side of it is when you look at the sort of arc landscape of global energy companies and investors, some of them, not all, some are not sort of going to like the lowest level of regulation, but actually want to be in markets where they feel like there's more environmental and indigenous consultation built in, and where they can credibly say that there's been a robust commitment by the government to sustainable project review. That doesn't mean they want endless delays and chaos like we sort of had in Canada at times, but I also think it goes the other direction, right? That they don't want to be perceived as big public multinational shareholder-owned companies, the public profile as rolling over public interest either.
Mm-hmm.
The U.S. may be going too far in one direction, whereas we're going or have gone too far historically in the other. So I think the Canadian side, if Carney wins election or if Pauly wins election, can they take some of what the U.S. is doing, which is the fast tracking, but without sacrificing effective stakeholder engagement that gives these projects, credibility in the eyes of the companies and investors behind them? That's the balance that we need to strike, and I think it's doable. But so far there hasn't been too much success, so we'll see.
Finding that balance has proven to be quite challenging. It's
Uh,
either sort of
yeah.
swinging a little too far either way, but
And it
well,
does vary between I think mining and LNG terminals and pipelines and transmission all have their different dynamics. On mining, the issues are so local, right? It's a very specific site with a very specific impact on water. It's not a big from a greenhouse gas emissions perspective. Things like pipelines and transmission, you really need to have a good stakeholder management process because you're talking about dozens or hundreds of stakeholders along the route. And then things like LNG terminals, you have a GHG impact, but you also have a lot of local impact too. So you have to look at sort of each segment across natural resources differently, but I think all of them would benefit from greater efficiency. And there's probably some lessons for Canada to learn how the US does it, and vice
mhm,
versa.
that's for sure. Do you think there's a different or better approach that Canada could be taking vis-a-vis negotiations with the US on the energy side, or is it a matter of just let Trump settle in his own mind that he wants energy abundance and then Canada can be that reliable supplier of additional energy to help have abundant energy in the US? Or should we be taking a different tact or tone or narrative right now that we feel would positively influence that ongoing energy export to the U.S.? What do you think is sort of the tone and narrative that Canada should be taking right now?
When this kind of first came up, I kind of made a few predictions, which I think are sort of playing out. And we'll see if they ultimately turn out to be true. One was that you would not hear in the early days of the Trump administration Canada's allies in Congress or in the refining industry or utilities or energy consumers or others really speaking up that much. That it would take time for them to kind of come out of the woodwork and speak up. I think that's kind of been right. Secondly, I felt that over time, particularly as we get through our own election, Trump's focus would shift more towards China as the sort of main. I think I said that Canada's sort of on the table, we're not the main course. And part of that would be that I thought that ultimately the Trump Canada dynamic would shift back to more of a sectoral level discussion, where Trump would basically say, okay, energy's great, let's leave it as it is. We got to fight them on softwood lumber or dairy or digital services or banking or something. And that would actually be okay because we know how to handle that. There's a USMCA framework. There's a negotiation that goes back and forth, hopefully some give and take. Not easy by any means, but very different than some of the stuff that was on the table early on. So that's another consideration I think is playing out. And the last lesson I think is the hardest one and the one that we'll see what happens with our new prime minister. But the question I felt that if you think about geopolitics, the idea of escalation, right, and leverage, we can retaliate against the US, but they can retaliate against us to a much greater effect. And it's what I would call an asymmetric relationship. When you take the sort of morality and fairness out of it, which is hard to do, but is necessary, you get to a situation where the US is a bigger, more powerful country, and they can hurt us more than we can hurt them. Not that we can't hurt them at all, but they can hurt us more. Whereas when the US are negotiating with the Chinese, that's more symmetrical, right? The size of the economy, the size of the military, the soft and hard power that's brought to bear. So given that, my feeling has been it's been better for Canada to kind of take the high road of saying, hey, you want to have reshoring in the US and manufacturing, let's figure out how we solve that problem together. How can our energy help you? How can our critical minerals help you? How can our supply chains and the sort of efficient manufacturing we have here support what you're trying to do down there? How can Bay Street and our pension funds play a role? What can we do together to kind of address trade imbalances and supply chain problems globally that we would have more traction with that kind of thing than with counter tariffs? Because I think in the counter tariff game, they have more bullets in the revolver than we have, literally and figuratively.
I totally agree. That was actually an aligned position view that we've had since day one, which is the asymmetry in the relationship and the impact that they could have on us versus we could have on them. And I think there was a lot of it would feel good in the first few moments of retaliating, and then after that, it would just be a growing and growing self-inflicted wound.
Yeah, I think that I've talked to the Trump people enough, people in and around commerce and treasury and like the people who are making some of this policy, although ultimately Trump himself is making most of it. And I think the general view is like they know that the geography of the relationship is not going to change and that they know that their ultimate leverage is that they are the best possible market for Canada.
Mm.
And so the question is, how far can they exploit that without damaging the relationship? And they obviously come very close or cross the line already. But I agree with you that it's a tough pill to swallow. But there's also potential upside for Canada. And I think the boldest prediction I made, which I may regret one day, is that ultimately, at least the energy sector may come out in a stronger place under Trump than ever before. Now, I've regretted that statement a few times over the last couple of months. But I do think that ultimately, not just energy, but potentially other natural resources and other forms of economic cooperation, there is the potential for this fortress of North America in a bifurcating world for Canada to be a partner to the U.S.
Mm-hmm.
It's a question of how we get from here to there. So we'll see if that plays out. But I think that's a more promising path than trying to, bully Trump and bully them into a different position.
Yeah, exactly. This notion of fortress North America, very even before the president was elected and inaugurated, a lot of us have been talking about a North American continental approach, and everything I kept hearing from the American side was the concept of a North American fortress doesn't resonate with us. It's all about national security. What's in your conversations with folks in the Trumpiverse? Is there resonance with a concept of Fortress North America or anything North America, or is it for them purely through the lens of national security for them and them alone?
I think the branding and rhetoric will be Fortress America and America first and make America great again. But the reality, when you take the branding and sort of rhetoric away, will be that North America does fit the criteria. Even the Greenland situation, even the Panama situation, the Canada tariffs, renegotiating the USMCA, it's a vision of North America where the US is probably playing a more dominant role and less of a partnership role than we would want. But ultimately, the objectives are, like you said, there's a national security aspect, which is like, how do we secure this whole region? Not so that we can, dominate what happens in the lumber industry in Canada, but for mutual security, right? That maybe NATO's outdated. We need something like that in North America, right? Or maybe we need a joint defense strategy for the Arctic. Maybe we need to have, instead of NATO defense commitments, more thinking about a US Canadian military supply chain. Maybe we need a joint defense strategy for Asia Pacific and China or Russia and the Arctic, cooperation on energy and resources. So I think underpinning an America first, make America great again strategy is partnership opportunities. I think Canada should 100% push back against anything that feels coercive or that's linked to sanctions and tariffs or export controls or any of these things, economic warfare, as they say. But we should also at the same time reach out and say, if that's what you want, if you want stronger US security and a stronger hemispheric continental approach to security, let's talk about how we can get there together, which I think both parties in our election have tried to do. And that'll be the success metric, I think, for the next government for sure.
Mm-hmm. Great segue for our remaining time to focus on Canada's energy future. We've got a federal election in just a little bit more than 10 days' time from recording here. And you recently wrote about a pathway forward for Canada that would link energy and manufacturing, East and West, more closely. I think you called it the spirit of Sarnia. Tell us a little bit about this strategy. Why are you recommending it for Canada's next government, and what are its component parts?
Well, oddly enough, and I won't tell you the whole story because we don't have time, but I was thinking about this in a strange way during the funeral of President Jimmy Carter. When Jimmy Carter passed away, a lot of people were thinking about the late 1970s and what happened during that oil shock, the second oil shock in the US and Canada. And one thing that happened, a lot of things happened, but one thing that happened is it was a devastating blow to energy intensive manufacturing. Companies that were really back then burning oil for power or burning oil for industrial boilers were decimated. And a lot of those companies move from cold jurisdictions like Ontario and Michigan down south to the Sun Belt in the US, where the heating bill would be less. So that was one blow. Then we had the gas crisis in 2000, 2001. Wasn't necessarily a crisis for Alberta. It was good times for Alberta, but for the consumer side, it was a shock. That hurt like the aluminum sector and steel and other industries. So we kind of have this idea that even in today's day and age, for certain industries on the manufacturing side, including autos, materials, plastics, things like that, energy is an important input. It's not just these 20th century industries, also now in 21st century, things like data centers, right, that are energy hungry. So the question is, can Canada, particularly in a scenario where we may not have the market access to the US that we wanted to have because of tariffs, is there more we can do with our energy at home to kind of both avoid what happened in the late 70s and early 2000s to our manufacturing sector, but also to attract investment from companies on the manufacturing side for whom energy is a critical input? So that's your, critical minerals processing, it's aluminum and steel, it's refining, it's petrochemical, it's materials, all of which, benefit pulp and paper, all of which can benefit from lower cost energy, but also the industry of the future, which is the data center, artificial intelligence, which is looking for electricity. And that electricity can be nuclear, it can be natural gas, it can be renewables, and Canada obviously has all that. So I think there's some real opportunities. The last thing I'll say is that from a political perspective, I wrote that article in part because I was just disappointed that we weren't having more of a discussion about manufacturing. And I didn't grow up in Sarnia, but I grew up in Peterborough, which is sort of similar in many ways in that sort of auto sector of Southern Ontario. And the feeling there is, I think voters in Ontario deserve more, right? Like, yes, it's good that the parties want to help provide tariff relief for workers that are affected. I'm glad they're doing that. That's not enough. We need to have a real strategic conversation about advanced manufacturing, what our next 10 or 20 years are going to look like, uncertainties in the US, how do we compete globally in these industries, and how can we leverage our energy advantage more effectively than we have in the past?
There's lots more that we can be doing in this country if we thought strategically, like you're proposing, in this to diversify that manufacturing base and be much less beholden to one customer as we have typically built in this country.
Well, Adam,
More.
no, I think your group and your federal counterparts, right? I think you're one of the few groups that does think this way because you have all these different industries at the table.
Yeah, exactly.
Right? So the manufacturing guys and energy guys separately, the business council sort of brings these different stakeholders together, and I think that's where there's possibilities to think of how we can build on these strengths. And also from a national unity perspective, right? That I talked in that article about the eastern pillar of manufacturing, the western pillar of resources, rather than sort of playing off against each other to sort of leverage the US. How can we actually make kind of a 2 + 2 = 5 and have a stronger manufacturing sector on the back of our energy resources that we have?
Yeah. Yeah. Both major contenders for prime minister are talking about building lots of things, being less reliant on the US, getting our products to market. If you look other than the sort of spirit of Sarnia concept, but if you look at some of the major broad energy projects that you think should be kind of in that national interest list right out of the gate from a new government, what jumps to mind for you that you would say should absolutely be on that list?
Well, part of the spirit of Sarnia was that that's the kind of point where the oil supply from the West meets the manufacturing, like literally, right? That those petrochemical plants and refineries, certainly historically, that was kind of the meeting point.
Mm-hmm.
What's a strategic industry? I mean, we joke about this in academia, right? That sometimes they say that the definition of a strategic sector or project is something that the government feels is too important to leave to the market, right? So I do think you need this public-private partnership dimension, right?
Yeah.
So okay, this means that basically putting taxpayer dollars behind certain projects, like we did with TMX, for example. I think that was justifiable. I would start by saying, if we're trying to use energy to support the economy as a whole and to diversify markets internationally, that requires infrastructure to move energy, right? So that's pipelines, it's ports for LNG, it is transmission lines, right, and rail, because rail can move the mineral and even some of the refined products and LPG and things like that. So I think infrastructure would be where I would start, and then I would probably go from there to LNG, and then to critical minerals. And I think LNG, because it is a global competition and it's not a free market, right? That you're dealing with a lot of national oil companies, both producer and consumer side. and you have a rival in the US that's clearly putting US government muscle behind the sector, we have to have some kind of an answer for that, which I think we can have. And then the critical mineral side, I think that's where you start to look at specific projects where, okay, especially when it comes to the addressing the Chinese dominance in certain minerals like rare earths and germanium, gallium that go into the technology sector, but also their control over the processing side. It's hard to compete with that on a pure private capital basis. You need some kind of government support because the Chinese can flood the market and manipulate the market in various ways. So that sets a stage for a kind of public-private partnership there as well. So I think the spirit of Sarnia idea was public-private partnerships where necessary, but also working with our geography to bring energy to the places where we can find new markets or we can backstop and provide a competitive advantage for our own industry.
Can we really sort of catch up with the U.S. on the LNG side and be a global competitor in that, or are we just too far behind? What do you think the LNG future is for Canada?
Well, it depends on the demand side, right? My criticism of the last government was that it seemed like they didn't want to let the market decide. Like my feeling was like it's not the job of the government of Canada to decide what the gas demand is going to be in the future. That's the job of the market.
Or the business case, right? Yeah.
Right. So exactly. So if a customer is willing to backstop a project, then that's what should drive it. I think it's unlikely that we're going to get 70, 80 million, 80 million, 90 million, 100 million tons of LNG like the US is going to have. But could we have 30 or 40 million tons and have a couple more big projects? Absolutely. I could be wrong, and there could be more upside to the demand that would drive that opportunity for Canada. A lot will depend on what happens with Russia. Is Russia going to be supplying China and other Asian markets, or are they going to be kind of shut in by sanctions and geopolitical risk? But it's really the US, Canada, and Russia that have the kind of incremental supply. Qatar has a lot of uncontracted volumes as well, so we have to compete with them. But there's room for growth in Canada, even if we don't, quote unquote, catch up with the US. One wrinkle to think about is Alaska, because I think a lot of people in Canada look at that saying, okay, well, Trump wants to make sure this happens. So they'll pressure the Japanese to buy it, and that will displace maybe opportunities for Canada. Another way to look at that would be to say, let's talk to the Americans about our Fortress America idea, Fortress North America, and say, why don't we just think about West Coast LNG, period? Whether it's Canada or the US, the idea is to build the market, right? And to have more stable supply, more predictable prices from more predictable countries that will actually stimulate demand for both sides. That's what I would do. If Trump perceives that, Alaska is going to displace demand or opportunity for Canada, he's going to go down that road. So I think there's opportunity for us to think about a G7 framework with the US and Canada as the major suppliers and other countries in Europe and Japan, obviously, as the major consumers, and how we could work together almost like a gas club. That would require a bit of a shift on the US side for sure. But I think there's logic to it of that sort of better together approach.
Yeah. Yeah. Interesting take, but clearly there's opportunity for Canada, which is good. In our last minute here or so, RJ, we've got playing host to the G7 in our backyard here in Kananaskis in June. What do you think is going to play out there that'll be of interest to on the geopolitical or energy landscape?
Well, first of all, I'm really glad that our election will be over with and we'll have a democratically elected minister in place to host the G7, because that was a concern a few months ago, whether we'd be in election season or a lame duck season. Look, I think you can't have the G7 in Canada or Alberta, certainly, without talking about energy. And I think LNG is on the agenda from a US perspective. But we shouldn't forget that the Europeans, who have 4 of the seats in the G7, are still very focused on climate and energy transition, things like hydrogen, things like nuclear, things like renewables. So that will be on the agenda. I think everybody's interested in the data center question, what that means for energy, making sure that the AI is sort of being led by the G7, not by the Chinese or the Russians or others. And I think the critical minerals topic, right? So there's a lot of things that Canada's well positioned and credible to sort of bring forward on the agenda. I think the wild card is sort of, obviously, like everything else these days, what's the view going to be from the White House? Is the G7 still focused on containing Russia and ending the war in Ukraine and backstopping Ukraine, or has that changed? And what role does that play in energy? And then, obviously, within the G7, we now have reciprocal tariffs and across the board tariffs and Section 232. And that's not exactly the framework for forming a club on various other issues. That's the big challenge as well. But no, I'm glad it's happening in Canada, and I'm glad it's happening in Alberta, because I think it's a chance for us to, as a country, to show that we do have ideas and resources and strategy for the natural resources sector, but also some of the other issues as well around trade and foreign policy.
Yeah, I agree. RJ, thank you so much for spending some time with us, giving your insights. There's so much going on at any given time, but I know if there's any one person that I appreciate the perspective of, it's you. And you just have a great wide angle lens, and you just bring it all together in a way that's meaningful and thoughtful for everybody. So thanks for spending time with me today.
I really appreciate it. Thanks, Adam. We'll be in touch.
Thank you for joining us. This podcast is a production of the Business Council of Alberta. You can learn more about us at businesscouncilab.com. We'd love to connect with you on social media, so give us a follow at BizCouncilAB, that's B-I-Z, Council AB, on Twitter, Facebook, and LinkedIn. If you like this episode and want to support our message of shared prosperity for all, please be sure to head over to Apple Podcasts, Spotify, or wherever else you get your podcasts to subscribe, rate the show, and give us a quick review. New episodes drop every other Tuesday. Thanks for listening, and see you next time.